In this video, I'm going to review the trade alert for Chubb that was sent as part of our stock picking service here at Stock Market Guides. On my screen here, you can see the completed trade alerts in the last 2 weeks for this particular portfolio. And you see Chubb here. And what you can tell is that the trade entry was at the opening bell on January the 13th. So let's go take a look at the stock chart. And this is a stock chart for CB, which is Chubb. And each of these price bars represents 1 day of price activity. And January the 13th is this bar right here, and the opening bell is right where my cursor is right now. And you can see that basically after we posted the trade alert, this stock took off, which is exactly what we hoped for and won. It's kind of a best case scenario there. Let's look at what the trade setup was so we can see why that may have happened. So in our trade alert here, we show the back-tested performance of the trade setup. And we also show what is the trading strategy associated with that trade setup. And in this case, the RSI indicator for Chubb, and RSI stands for the Relative Strength Index, and it's kind of a way of determining whether a stock might be oversold, in which case it might be due for a rebound. And in fact, let's go look at that stock chart and show. You can see the price dipped. It was coming down, and then it just really plunged down steeply. And that caused the RSI value to go down. In fact, you can see down here, there's an indicator for the RSI right here. And it went down. You can see the blue line on this particular trading platform. That indicates that it went below the level, indicating that it might be oversold. And so we picked that up with our scanner, and the intelligence that we bring to the equation is we say, well, the RSI metric shows a low value, but how many times has that happened in the past for Chubb? And what happened to the stock in each of those cases thereafter? And that's what this information shows. It shows, okay, this has happened in the past this number of times, and 51 times the stock ended up going up over the next month. This is a 1-month trade in this particular case. And 26 times it did not go up, it went down. And so it basically shows that the odds might be in our favor for the stock to go up when this particular indicator flashes in that way. And so that could explain why the stock rebounded like it did. It was such a precipitous drop so quickly and forcefully that it's almost like a rubber band snapping back after it's been pulled too far, and it just kind of shoots back up. So we identified that. We brought intelligence to the equation, saying this is how many times it's happened in the past and how it's performed. And so the odds might be in our favor. And so anybody who followed along with this trade caught a ride on that snapback. We have trades of different durations. This particular trade was designed to last up to a month, but it hit our profit target just in a couple of days because it went up so forcefully. But we have trade durations of just a week as well. And so each customer can kind of decide what trade durations work best for them. The 1-week durations are for more active traders who like cycling in and out of positions on a pretty regular basis. The 1-month trades are better probably for people who don't like quite as much activity but want to be more active than, say, a buy and hold investor. So that's it. That's how the Chubb trade performed. If you have any questions, you can contact us anytime. Our email address is support@stockmarketguides.com.